Assalamualaikum warahmatullahi wabarakatuh. My name is Haziq Adri bin Saiful Riza, the presenter for today. Okay, so now I will present the company's financial ratio analysis that I have choose. Okay, so I have choose these two companies, namely as CCK Consolidated Holding Berhad and Saudee Group Berhad. Both of them are from the same industry, which is a food and beverage industry. First, let's talk about CCK Consolidated Holding Berhad. CCK was established on 5th August 1996 as an investment holding company and was listed on the second board of the Kuala Lumpur Stock Exchange on 10th December 1987. They also involved in prawn agriculture and prawn processing using the latest farming technology and robotics to ensure environmental friendly when producing a prawn-based product. Throughout the year, CCK Group has experienced dynamic growth and is fully committed towards expanding its presence throughout Malaysia to supply quality fresh and frozen food products in the region. The Saudi group of companies, which include Perusahaan Saudi Sdn Berhad and Saudi Cold Storage Sdn Berhad, was founded in 1985. The manufacturing plant is in Sungai Petani, which is in the heart of Kedah's industrial sector. With a total workforce of 500 people, they are currently one of the Malaysia's largest and most progressive packaged frozen food manufacturers. Saudi Group Berhad was expert in manufacturing of frozen processed food products such as burger patties, nuggets, sausage, meatballs, and many others. There are two types of ratio analysis that can be used to evaluate your company's financial performance, which are trend analysis and cross-sectional analysis. Trend analysis is a financial analysis of a company by comparing its financial ratio from a different year. On the other hand, cross-sectional analysis is a financial analysis that compares two or more companies within a certain year. Let's move on to the next slide. We have four types of ratio analysis, which are liquidity ratio, activity ratio, leverage ratio, and profitability ratio. All of them ratio have different purposes to measure different things. But first, let's start with the liquidity ratio. A company's liquidity is its ability to meet its near-term obligation and is a major measure of financial performance. Liquidity can be measured to two ratios, which are current ratio and quick ratio. Current ratio indicates a firm ability to fulfill short-term obligation with short-term assets, while quick ratio is the same as current ratio except without relying on inventory. Based on the table there, you can see that CCK's current ratio for all three consecutive years show good ratio performance. Although there is a decrease of current ratio in 2020, the company still managed to fulfill their current obligation with their available current assets. We can see that 2019 had the highest current ratio, which indicates that the company had the most effectiveness to fulfill their current obligation with current asset. Meanwhile, CCK quick ratio for all three consecutive years also shows a good ratio performance. Based on the table there, we can see that the company had the highest quick ratio performance on 2019. Therefore, it shows that the company had the most effectiveness to pay its short-term obligation without relying on their inventory on 20. Move on to the next slide. We have the activity ratio that consists of 5 ratio analysis. Its purpose is to measure efficiency of company's assets to generate sales. CCK's inventory turnover for all three consecutive years show good ratio performance. Based on the table, we can see that the company had the highest inventory turnover performance on 2020. Therefore, it shows that the company had the most effectiveness of inventory to generate sales in 2020. Meanwhile, CCK's average collection period for all three consecutive years show good ratio performance. This is the company's average collection periods. This is because the company's average collection period is decreasing year by year, shows that the company has no problem in collecting debt. Okay, so we continue to the next activity ratio. CCK's total asset turnover for all three consecutive years show good ratio performance. Based on the table above, we can see the company had the highest total assets turnover performance on 2018. Therefore, it shows that the company had the most effectiveness of total asset to generate sales in 2018. CCK's account receivable turnover for all three consecutive years show good ratio performance. This is because the company's account receivable turnover was increased from 2018 until 2020. Based on the table, we can see that the company had the highest inventory turnover ratio performance on 2020. Therefore, it shows that the company had the most effectiveness of collecting receivable in 2020. Next, CCK fixed asset turnover for all three consecutive also show us a good ratio performance. Based on the table, we can see that the company had the highest inventory turnover performance on 2018. Therefore, it shows that the company had the most effectiveness of using fixed asset to generate sales in 2018. Move on to the next slide. Now we compare the trend analysis of CCK companies' leverage ratio for 2018 until 2020. Leverage ratio is a ratio to measure the extent to which a firm is using a debt financing and the degree of safety that the firms provide to the creditors. There are three ratio analyses involved, which are debt ratio, debt to equity, and time earned interest earned. So let's start with debt ratio. CCK debt ratio for all three consecutive years show good ratio performance. It shows that the company has more assets than debt as the percentage is less than 100%. However, there was an increase of debt ratio from 2018 until 2020, indicates that the risk is gradually increased. Next, CCK's debt to equity ratio for all three consecutive years show good ratio performance. This is because it shows that the company had a decrease in the percentage of debt to equity from 2018 until 2020. It indicates that the company's debt is gradually decreased from year to year. Next, CCK's time interest earned for all three consecutive years show good ratio performance. This is because it shows that the company had an increase on the ratio value from 2019 until 2020. It indicates that the company can meet its fixed interest payment and lower risk of default. The last ratio analysis for CCK company is profitability ratio. This ratio shows us the efficiency of firms to generate profit. It consists of 5 other ratio analyses, which are gross profit margin, net profit margin, operating margin, return on asset, and return on equity. As we can see on the table, CCK gross profit margin for the year 2018 until 2020 show good ratio performance. It shows that the company's gross profit margin was gradually increased from 2018 until 2020. In the year 2020, the company had the highest percentage of gross profit margin, which is 19.45%, indicates that every 1 ringgit sales, the company makes approximately 20 cents of gross profit. Next, the company net profit margin for all three consecutive years also show us a good ratio performance. It shows that the company's net profit margin was gradually increased from 2018 until 2020. In the year 2020, the company had the highest percentage of net profit margin, indicates a better income to shareholders. On the next slide, we have another three profitability ratio based on the table of operating profit margin. CCK's operating profit margin for all three consecutive years show us a good ratio performance. It shows that the company's operating profit margin was gradually increased from 2018 until 2020. In the year 2020, the company had the highest percentage of operating profit margin, indicates a better productivities than in other years. In next, CCK's return on asset for all three consecutive years also show us a good ratio performance. It shows that the company's return on asset was gradually increased from 2018 until 2020. In the year 2020, the company had the highest percentage of return on asset. It indicates that a high return of the company's investment. Finally, for the last ratio analysis, we have CCK's return on equity for all three consecutive years. So, yes. Finally, for the last ratio analysis, we have CCK's return on equity for all the three consecutive years show us a good ratio performance. It shows that the company's return on equity was gradually increasing from 2018 until 2020. In the year 2020, the company had the highest percentage of return on equity, indicates that a high return of company to shareholders. Now, I will continue with the trend analysis for Saudee Group Berhad. I will start with liquidity ratio. As we can see on the table, Saudee Group Berhad's current ratio for all three consecutive years show good ratio performance. Although there was a decrease of current ratio in 2020, the company still managed to fulfill their current obligation with their available current asset. Next, Saudee Group Berhad's quick ratio for all three consecutive years show good ratio performance. Based on the table below, we can see that the company had the highest quick ratio performance on 2020. Therefore, it shows that the company had the most effectiveness to pay its short-term obligation without relying on their inventory on 2020. Moving on to the next slide about the company's activity ratio for the year of 2018 until 2020. Based on the table here, Saudee Group Berhad's inventory turnover for all three consecutive years show good ratio performance. We can see that the company had the highest inventory turnover ratio performance on 2020. Therefore, it shows that the company had the most effectiveness of inventory to generate sales in 2020. Next, Saudee Group Berhad's average collection period for all three consecutive years show poor ratio performance. This is because the company's average collection period is increasing year by year, showing that the company has a problem in collecting debt. Although the company had the highest efficiency of Average collection period in 2018 by 51 days to collect the debts. Okay, so we continue to the next activity ratio. Saudee Group has total asset turnover for all 3 consecutive years show good ratio performance. Based on the table there, we can see that the company had the highest total asset turnover on 2020. Therefore, it shows that the company had the most effectiveness of total assets to generate sales in 2020. Although the company's total assets turnover is decreasing from 2018 and 2019, it still shows a good performance because there is an increase in 2020. The same thing happens in account receivable turnover. Saudee Group's Berhad account receivable turnover for all 3 consecutive years show a good ratio performance. Based on the table above, we can see that the company had the highest account receivable turnover on 2018. Therefore, it shows that the company had the most effectiveness of collecting receivable in 2018. Next, Saudee Group Berhad's fixed asset turnover for all 3 consecutive years show us a good ratio performance. Based on the table there, we can see that the company had the highest fixed asset turnover ratio performance on 2020. Therefore, it shows that the company had the most effectiveness of using fixed asset to generate sales in 2020. On this slide, we compare Saudee Group Berhad's leverage ratio for the year 2018 until 2020, which consists of three more fact ratio: debt ratio, debt to equity, and time interest earned. Based on the table, Saudee Group has debt ratio for all 3 consecutive years show as a good ratio performance. It shows that the company has more assets than debt as the percentage is less than 100%. However, there was an increase of debt ratio from 2019 until 2020, indicates that the risk is greatly increased. Next, Saudee Group has debt to equity for all 3 consecutive years show as a good ratio performance. This is because it shows that the company had a decrease in the percentage of debt to equity from 2018 and 2020. It indicates that the company debt is gradually decreased from year to year. On the other hand, Saudee Group has term interest earned for all 3 consecutive years shows as poor ratio performance. This is because it shows that the company had a negative value of time interest earned for each year. It indicates that the company cannot meet its fixed interest payment and lower risk of default. This is due to the company end up to have a loss before interest. Moving on to the next slide, the last ratio analysis for Saudee Group Berhad is profitability ratio. Based on the table there, Saudee Group Berhad's gross profit margin for 2018 and 2019 both show good performance, while in 2020 it shows a little bit of performance. This is because the company suffered great loss in 2020. Therefore, it indicates that the company had a problem to control costs in that year. In the year 2018, the company had the highest percentage of gross profit margin, which is 20.25%. Indicates that every 1 ringgit sales, the company makes approximately 21 cents of gross profit. Next, Saudee Group Berhad's net profit margin for 2018 and 2020 shows a poor performance. This is because the company suffered great net loss, especially in 2020, except in 2019. It means that the money the company makes from selling a service is not enough to cover the cost of production and selling this product and service. Next, we have a tables of operating profit margin, return on assets, and return on equity. As we can see here, Saudee Group has operating profit margin for all 3 consecutive years show poor ratio performance. It shows that the company's operating profit margin was in a negative value from 2018 until 2020. This is because the company suffered a loss before interest, or operating loss. The worst operating profit margin value was recorded in 2020. It indicates that every 1 ringgit the company spent, it lost 33 cents. Saudee Group has return on asset for all 3 consecutive years show poor ratio performance too. This is because the company suffered a net loss in both 2018 and 2020. Although in 2019 the company had a positive value of return on asset, it's still too low to indicate as good performance in return on asset. A low or negative value of it suggests that the company cannot use its asset effectively to generate income. And the last ratio analysis also shows us that Saudee Group Berhad's return on equity for all 3 consecutive years is in poor ratio performance. This is because the company suffered a net loss in both 2018 and 2020. Although in 2019, the company had a positive value of return on equity, it's still too low to indicate as good performance. A negative value of it suggests that the company cannot make a return to shareholders. Okay, on this slide, I will present about a cross-sectional analysis to compare both CCK and Saudee Group Berhad in the year of 2019. Let's start with liquidity ratio. Based on the table there in 2019, it shows that the CCK had higher carbon ratio than Saudi Berhad. It indicates that CCK had more effectiveness to pay its short-term obligation on time. The same thing happens on quick ratio, where CCK had higher quick ratio than Saudi Berhad. Indicates that CCK had a better ability to pay its short-term obligation without relying on its inventory than Saudi Berhad. From this slide, we can see a comparison of activity ratio of cross-sectional analysis for both companies. In 2019, it shows that CCK had higher inventory turnover than Saudi Berhad. It indicates that CCK had more effectiveness of inventory to generate sales than Saudi Berhad. In addition, if it's about average collection periods, CCK took less days to collect its account receivable, which is in 25 days, than Saudi Berhad, which took 55 days to do so. This shows that CCK had less problems in collecting account receivable than Saudi Berhad. Next, CCK had higher ratio of total asset turnover than Saudi Berhad. Shows that CCK had higher effectiveness to generate sales from total asset. Then CCK also shows that the company can collect at least 16 times per year its account receivable. Then that is way higher than Saudi Berhad, which can only collect it at least 6 times per year. This indicates that CCK had higher effectiveness of collecting its receivable. Finally, it is shown that CCK had higher fixed asset turnover than Saudi Berhad. This indicates that CCK had more effectiveness of its fixed asset to generate sales. Moving on to the next slide, we compare both companies' leverage ratio on 2019. As we can see, both companies show good performance when it comes to debt ratio, because both companies' ratio value doesn't exceed 100%. But CCK had a better ratio because it was less than Saudi Berhad. It indicates that CCK had less amount of debt to finance assets compared to Saudi Berhad. The same thing happens on debt to equity ratio, where CCK had lower ratio than Saudi Berhad. It indicates that CCK had less amount of debt compared to Saudi Berhad. It also shows how CCK had lower risk of shareholders to cover the debt than Saudi Berhad. Lastly, CCK had a better performance of time interest earned, as it was higher than Saudi Berhad's. Moreover, Saudi Berhad had a negative value as its ratio of time interest earned, thus it indicates that the company cannot meet its fixed interest payment. Okay, now we compare both companies' profitability ratio in 2019. It shows that CCK had higher gross profit margin than Saudi Berhad. Indicates that CCK had higher contribution of margin than Saudi Berhad. Thus, for every 1 ringgit of sales, CCK can make 18 cents, while Saudi Berhad can only make 9 cents. Next, it shows that CCK had higher percentage of operating profit margin than Saudi Berhad. It indicates that CCK had a better performance than Saudi Berhad when it comes to productivity. The same thing happened in the net profit margin, which shows that CCK had a better performance than Saudi Berhad. Therefore, CCK can generate a better income for shareholders than Saudi Berhad. Other than that, CCK also shows a better performance on both return on asset and return of equity. Then, it means that CCK can generate a higher return on firms invest and higher return to shareholders than Saudi Berhad. Thus, it is believed that CCK had a better overall performance than Saudi Berhad on profitability ratio. It is to be concluded for this study that this is a very clear decision to make from both company financial analysis, as CCK shows a better performance of financial ratio, but Saudi Berhad had a poor performance. We can see from the analysis that CCK had a better overall liquidity ratio performance, a better overall activity ratio performance, a better overall leverage ratio performance, and a better profitability ratio performance from 2018 until 2020. This is mostly because Saudi Berhad suffered a great loss as its operating loss and net loss from 2018 until 2020. Thus, the company should make a new plan and strategy to develop their business to a great success without any problem that will lead to downfall of the company's financial position. Okay, that's all for me. Thank you for your time.